Hello and welcome to the session, which we will today's session, which we will discuss understand the impact of criminal law on business and professional organizations. So, can you see my screen and can you hear my voice? Everything is okay?
Yes,
Any
just
issue?
needs to be a bit bigger to cover the whole screen.
Okay. Oops. Is it all right now, Martin?
Yes, it's clearer. Thank you.
Okay, no worries. So, indicative contents, we'll start learning outcome true now. So my name is Yasir, and if there is any issue, please do let me know during my session. So
Thank you.
indicative contents, legal principles, legislations, case laws, ethical codes relating to business and professional organizations, for example, government guidelines code, issues by professional bodies. Then we will talk about status of each, for example, law, regulation, and guidelines, and we will go through, these topics: relationship and interactions, corporate governance, and ethical principle practices. Elements of consequences of malpractice, defense against malpractice for professional accountants, elements and consequences of fraud, consequences of bribery, and national and international regulations and relating. We will also what constitutes money laundering, assessment criteria, basically analyze the relationship between legal principle, legislations, case law, and ethical codes. Basically, this is related to your assignment. But learning outcome 3, where you can analyze the relationship between legal principle, legislation, case laws, and ethical codes. Then explain the elements of consequences of malpractices, fraud, and bribery in business organizations. Explain offenses and penalties related to money laundering, and then finally offenses and penalties related to computer misuse and cyber crimes. Right. Analyze the relation between legal principles, legislation, case laws, and ethical codes. Sorry. So, in professional conducts, understanding the interplay between legal principles, legislations, case laws, and ethical code. Ethics, as defined, include a set of moral principles guiding behavior, distinguish between what is deemed right and wrong. So these ethical values are upheld by individuals and organizations alike, permitting the business of the fabric of business operations. So to ensure adherence to ethical standards, organizations often devise ethical codes and code of conduct for their employees. For professionals like accountancy, with the profound duty to society, strong moral values are important. Uh, Objectives of the accountancy project professions underscore the importance of ethical conduct, mastery of technical skills, development of an ethical approach to work, acknowledgement of duties to society, and maintaining an objectives outlook are among the primary objectives. Uh, Through adherence to a code of professional ethics, accounting strive to achieve these objectives, so thereby ensuring the highest standard of services, uh, and garnering acceptance by the public. So professional bodies including qualified accountants typically have code of ethics, guiding members in navigating ethical dilemmas. So these codes through diverse share fundamentals, similarities. A professional distinguishes itself through essential characteristics, notably a body of theory and skills, adherence to common codes of values and conduct, and acceptance of duty to society. Accounting as a profession exemplifies these characteristics. So it covers a comprehensive body of theory and skills acquired through education and training. So adherence to a common code of values and conduct to central to profession administered by governing bodies to ensure an objectives uh, outlook and uphold ethical standards applicable to all members. So also the accounting profession acknowledges its duty to society, fostering trusts that professionals act in the public interest in exchange for qualifications and the privilege of using professional titles. Characteristics applicable in the accounting profession: a body of theory and skills, adherence to common code of value and conduct, acceptance of a duty to society as a whole. So if you body of theory and skills, you can see here technical skills such as auditing or accounting, acquiring by training and education, examination system which ensures accountants obtain the knowledge required to act responsibility with their profession, maintained by continuing professional development or CPD. So next is adherence to common code of value and conduct. This serves as a cornerstone of the accounting profession, administered to regulatory bodies. So these ethical standards maintain an objectives outlook and uphold principles applicable to all members. So this adherence fosters trust in the profession's commitment to acting in the public interests. Then finally, we talk about duty to society. So he's talking about duty to society as a whole by maintaining an objectives outlook and adhering to ethical standards. Accounting demonstrate their commitment to service society needs. In return to upholding these principles, member are granted professional qualification and privilege of utilizing professional titles, reinforcing the symbolic relationship between the profession and society. Ethics and uh, ethics and ethical behaviors. Any comments on this, Martin? Anything, if anyone is there? So, why behave ethically? Law and regulations required also reputation and standards, and then maintain public confidence and protect public interest. So, avoid conflict of interest, be objective, and act in the public interest. Keep sensitive information confidential, be straightforward and honest, maintain professional knowledge, behavior, and skills, act within the spirit and letter of the law. So fundamental ethical principles, accountings, basically based on 5 fundamental ethical principles that underpin their professional conduct. Integrity is first one. Integrity is paramount. requiring honesty, fairness, and truthfulness in all dealings. Objectivity ensures professionals remain unbiased and free from conflicts of interest or undue influence, allowing them to act in the best interest of the public. Then professional competence and due care demand continual improvement and diligent application of knowledge and skill to deliver quality services. Confidentiality refrain from disclosure of confidential information and from using such as information for personal or third party advantages. Professional behavior lastly entails compliance with relevant laws and regulations to uphold the integrity of the profession and avoid actions detrimental to its reputation. Conceptual work framework. The Accounting Code of Ethics provide a structural approach to resolving ethical, dilemmas through a conceptual framework. So this framework involves several steps. If you can see here, uh, uh, identifying threats to fundamental principle, uh, then evaluating these threats and applying safeguards to mitigate risk. Should safeguards prove insufficient, professionals must consider discontinuing actions or services to uphold ethical standards. So, various types of threats may compromise ethical behavior, including self-interest, self-review, advocacy, familiarity, and intimidation. Uh, Either by the profession, legislation, or regulations, or within the work environment through quality control measures. So basically, by adopting this conceptual framework, accountant can navigate complex ethical scenarios with clarity and integrity, ensuring their actions uphold the profession's ethical standards and serve the public interest effectively uh, through ongoing adherence to fundamental principles and the application of safeguards. Professionals can maintain the trust and confidence of stakeholders while upholding the integrity of the accounting profession. Right. Next is difference between principles and rules. In ethical decision making, professional often face the dilemma of choosing between a principles based approach and a rule based approach. So the principle based approach advocate for case by case judgment, emphasizing adherence to overarching ethical principle rather than strict rules. So this approach offers several advantages, including rigor, as it requires compliance with the spirit rather than just the letter of ethical guidelines. It allows for a broader consideration of the bigger principle, or sorry, picture, context, and is flexible to accommodate changing circumstances. Also, it fosters the development of skills and judgments, promote a culture of ethical awareness, and encourages personal responsibility among professionals. So, in on other hand, the rule-based approach offers clarity and simplicity by providing clear-cut guidelines for ethical behaviors. The correct course of action may be more, appropriate, uh, making enforcement easier. Uh, but this approach also has its disadvantages. It may not always yield a clear-cut answer, as there may be more than one course of action or conflicting interests or balance. Additionally, it may promote a tick box mentality where professionals focus uh, compliance without considering the broader ethical implications. Furthermore, creating rules for every eventually can be impractical and may lead to focus on detailed rules at the expense of the bigger picture context. Compliance with the law, there are two categories of UK laws we discussed in our first session as well, criminal and civil law. So, with criminal law addressing offenses that impact the entire community, and civil law handling conflict with the community, while compliance with laws and regulation is necessary, it may not always constitute ethical behavior. There are instances where activities are legal but not ethical. So, highlighting the importance of ethical code is guiding professional conducts. So, accountants may be subject to various laws that may not be immediately apparent, such as health and safety legislation, very common, or employment, protection and equality laws. While these laws must be adhered to, ethical behavior extends beyond mere compliance. Accountants' ethical code, while not legally enforceable, serves as a guide for upholding professional standards. Penalties for ethical breaches are typically determined by professional bodies, with accountants subject to additional regulations depending on the nature of their work. Accounting profession. Uh, have you heard any of these, or can you any idea or comments on these, Martin?
Yes, I have um, heard of them. Yes.
Yeah,
Uh,
so you know that International Federation of Accountants, like IFA is also a member of International Federation of Accounting. Basically serve as an international body representing major accountancy bodies worldwide. So it developed a high standards that all accountant must adhere to, with many professional bodies basing their ethical code on the IFA C codes of ethical for professional accountants. Am I right, or anything you want to add? Or
No, I think it forms the basis for other individual national bodies to also draw on as a source of reference for their code of conduct.
yes. So next one is CCAB, or Consultative Committee of Accounting Bodies, purely that UK based, 5 members of which 3 ISA, WI, CAS and SIPWA, Chartered Accountant of England and Wales, Scotland, and Chartered Accountant of Public Finance and Accountants are sponsoring bodies of the AAT. So the CCAB coordinates and unites the accountancy professions in the UK and Ireland. Seema was the member of CCAB, but I think so for some reason they just quit. HM, Revenue and Customs. Oh, definitely, about everybody know about tax office, or HM, Revenue and Customs, and the National Crime Agency. Both play essential roles in regulating and overseeing aspects of financial and accounting practices. HMRC focuses on ensuring the correct payment of taxes, while the NCA tackles serious organized crimes, including fraud, money laundering, which may intersect with accounting activities. Overall, these bodies collaborates to uphold the integrity and professionalism of the accounting profession, ensuring adherence to ethical standards and legal obligations. Business ethics and professional values, key principle for public life. So principal ethics and professional values entails the moral responsibility of business for their actions and the impact uh, uh, thereof on individuals and society. It underscored the importance of holding businesses accountable for their effects on various stakeholders. Key principles for public life, including integrity, objectivity, accountability, openness, and honesty. So, or while organizations' primary aim for profit, they must also safeguard the rights of stakeholders, both internal and external. So, the necessitates the development of code of conduct to guide ethical behavior within the, within the organization. Business ethics and again, so the code of conduct serves as a framework for influencing employee behavior by delineating procedures for specific ethical situations. Violations of the code may result in sanctions, including termination of employment. Also, professions or organizations often adopt codes of practice to regulate members and support legal duties. For example, AAT, you know, is giving example of AAT. AAT code of professional ethics serves as a guiding framework for accounting professionals. Creating an effective ethic program involves steps such as active leadership, buy-in from employees, suitable training, and promoting consistency of conduct. Effective ethical programs offer advantages such as improved communications of expected standards of behavior, reduce risk and damage to corporate reputation. Sustainability and CSR, or corporate social responsibility. So accountants bear a responsibility to act in the public interest and uphold broader social responsibility beyond the confines of the office environment. Sustainability, as defined by the UN, UN Brundtland reports, involves meeting present needs without compromising the ability of future generations to meet their own needs. Sustainable development entails developing operations to coexist with the society, prioritizing long-term gains over short-term profit. Corporate social responsibility under the obligations that business feels towards their local community, stakeholders, and society as a whole. This includes supporting economic, social, and environmental initiatives, often referred to as the triple bottom line. Economic responsibilities involves supporting organizational profitability and contributed to local economics. Social responsibilities entails supporting labor communities and where the business, regions where the businesses operates. Environmental responsibilities focus on minimizing environmental impact, conserving resources, and supporting sustainable practices. By integrated sustainability and CSR initiatives into their operations, finance professionals play an important role in advancing, society well-being and ensuring the long-term viability of businesses. So this approach aligns with the broader ethical principles of accountability, integrity, and responsibility, guiding professionals to act in the best interests of society while fulfilling their organizational roles. Governance, risk, and ethics. Governance holds significant importance for directors and managers of organizations, focusing on proper directions and control of ensures actions are in the best interest of shareholders. However, discussions regarding effective governance often, intersect with ethical and corporate social responsibility. Notably, high-profile corporate failure underscored the importance of risk management in business operations. Effective risk control involves establishing a robust internal control, including internal audit system, to mitigate risk and safeguard organizational integrity. Next, explain the elements and consequences of malpractices, fraud, and bribery in business or organizations. Corruption cover any illegitimate use of authority and may involve various criminal activities. Bribery specifically pertains to the giving or acceptance of a payment or other, illegitimate advantages. So negligence refers to actions or omissions that fall short of the standard expected for a reasonable persons. So to establish a claim in negligence, it is essential to demonstrate that a duty of care was breached and resulted in foreseeable loss to the claimant. Consequences of malpractice. Uh, Fraud and bribery in business organization can be served, ranging from legal penalties to reputational damage and financial loss. Malpractice undermine trusts and ethical, uh, ethically and responsibly, leading to erosion of stakeholders' confidence and potential legal uh, you know uh, ramifications. So, fraudulent activities such as identity theft, then mortgage fraud or credit cards, fraud not only harm individuals but also tarnish the organization's reputation and may result in regulatory scrutiny and financial, repercussions. So similarly, bribery compromises ethical standards, damages corporate integrity, and may lead to legal consequences, including fines and imprisonment. What is financial fraud? Financial fraud, uh, as you can see here, application fraud is usually defined as when an individual uses their own name to apply for a financial product but use false information or counterfeit documents in the applications. So these two types of fraud can be carried out by individuals under their own name or by someone who has stolen their identity. Example, identity theft, as I said, mortgage fraud, credit and card fraud, fake charities, prize and lottery fraud, debt collections. So these fraudulent activities not only harm individuals and organizational financially, but also erode, trust in financial systems and institutions. Identity theft, for example, can lead to significant financial losses for individuals and reputational damage for financial institutes. Then, if we talk about mortgage advice, distorts housing markets and undermines the integrity of lending practices. And then, credit card frauds undermines consumer confidence in electronic payment system, leading to increased security measures and costs for business and consumers. Corruption, when we talk about corruption, corruption covers various unethical behaviors, primarily, bribery and fraud and extortion exhibited by individuals entrusted with responsibilities in both the public and private sector. So bribery involves offering or accepting undue advantages or influence actions or decisions uh, which violates the individual's duty and integrity. So, for example, bribery, fraud, and extortions. Bribery may, manifest in various forms such as excessive hospitality, facilitation, payment to political parties. So, while firms are permitted to provide hospitality and engage in promotional activities, authorities scrutinize such practices to ensure that they do not serve as cover of for bribery, facilitations, payment, which induce officials to perform routine functions, blur the lines between bribery and acceptable business practices, with some countries criminalizing such payments abroad. Then, yeah. Facilitation payments are additional payments made to officials to expedite routine functions they are obliged to perform. However, distinguish between facilitation payments and bribery can be challenging with varying legal framework across different countries. Some countries criminalize, facilitations payment abroad. Others do not prohibit them, leading am guilty in defining acceptable businesses practice. Corruption extends beyond bribery and may involve illicit activities such as buying votes for misappropriating public funds. The prevalence of corruptions poses significant challenges globally. So, impacting businesses and economic alike, surveys, surveys indicates that many companies find it difficult to conduct businesses in certain countries without engaging in bribery and corruptions. So highlighting the pervasive nature of this issue. Again, difference between bribery, as I said, offer, promising, giving, acceptance, or soliciting of an advantages uh, as an inducement of for an action which is illegal, unethical, or a breach of trust. Corruption is recognized to be one of the world's greatest challenges. Uh, you can say that he's giving example of KPMG surveyed top 100 companies in August 2009 and found that two-thirds said it was not possible to do business in, as I said, that in some countries without being involved in bribery and corruption. So yet only 35% has stopped doing businesses there. So the World Bank has stated that bribery has become a $1 trillion industry. Accounting professions, approaches of the accounting professions. So the accounting professions demonstrates responsibility by acknowledging and rectifying any negative consequences of accounting practices, for example, in response to failures such as those seen in Enron scandal, where off-balance sheet financing obscured the company's true financial positions. So the profession amended its practices to ensure a greater transparency and accountability. So this reactive approach involves addressing issues as they arise. Alternatively, the profession can adopt a proactive approach by activities seeking to contribute positively to the public interest. So, for example, providing guidance on environmental auditing, reflecting a commitment to social well-being, even in the absence of direct demand from stakeholders. So these approaches demonstrate the profession's evolving role in addressing, social needs and promoting ethical conduct. So again, there are two type of approaches: reactive approach and proactive approach. Accounting profession demonstrate responsibility of acknowledging and rectifying negative consequences of accounting practices. In response of failure such as seen in Enron scandal, as I said, that where off balance sheet financing obscured the company's true financial position. So the professional amended its practices to ensure greater transparency and accountability. So we also see that reactive approach involves addressing issues as they arise, and uh, uh, the profession can adopt a proactive approach by actively seeking contribute positively to the public interest. What is the public interest? Any comments on this public interest? What is the public interest, or any?
Yeah, anything that affects the general public, either for positive or negative.
Yes, that's correct. So basically, concept of the public interest pertains to action or decisions that support the collective well-being of society as a whole, rather than serving individuals or sectional interests. So acting in the public interest entails prioritizing the common good over narrow interests, benefiting the broader community of people and institutions. However, defining the public interest is, complex and subjects to debate in term of a law as well. That while some arguments that actions must benefit every member of society to be considered in the public interest. So other contend that any action benefiting some while harming none can be deemed as such. So, moreover, conflicts may arise between the public interest and individuals or group interests. So, highlighting the nature of ethical decision making within society contexts. Explain offensive and penalties related to the money laundering. Uh, Here is a POCA. Where is POCA? Here. So money laundering offenses under POCA interest proceeds of Crime Act 2002. So money laundering is defined as an act constituting an offense, criminal property subject to money laundering, uh, covers proceeds from various illegal activities such as tax evasion, bribery, corruptions, and non-compliance with regulatory requirements. Terrorism financing, which involves funding activities aimed at influencing government or intimidating the public for political or ideological motives. So it is also addressed under anti-money laundering laws. POCA or POCA 2002 outlines specific money laundering offensive, including concealing, disguising, converting, transferring, or removing criminal property, participating in arrangement to facilitate the acquisition. So, use or control of criminal property and acquiring, using, or possessing criminal property. Uh, Offending face serves penalties, including imprisonment, reflecting the seriousness of money laundering activities and their impact on financial integrity and security. So, in addition to principal money laundering offenses, POCA stipulates failing to report suspected money laundering and tipping off as punishable offenses. Failing to report suspicious of money laundering carries a maximum sentence of 14 years, as you can see here, where tipping off, which involves disclosing information that may prejudice money laundering investigates, is punishable by up to 5 years. So then failure to disclose knowledge or suspicious of money, 5 year tipping off and failure. So authorities distinguish between authorized disclosure made by money launderers and protected disclosures made by individuals aware of or suspecting money laundering activities. A required disclosure must include the identify of suspects, identify of here you can see identify of suspects, information supporting suspicious suspicions, the and detail of laundered property were known. So these reporting obligations aim to enhance transparency and enable law enforcement agencies to investigate and prosecute money laundering activities effectively. Next is understanding fraudulent behavior. Fraud include intentional deception conducted for personal gain, constituting criminal activity with served consequences, including imprisonment. Various type of fraudulent behavior are associated with companies, including under dealing, market abuse, bribery, fraudulent trading, and criminal mismanagement. So individuals involved in the operations, management, or winding up of a company may commit criminal offenses under fraud legislation. So fraudulent behavior undermines trust in financial system, uh, and possess significant risks to financial stability and integrity. As such, robust regulatory framework and enforcement mechanisms are essentials to detect, prevent, and prosecute fraudulent activities. uh, 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 Educating professionals, including accountants, or identifying and addressing fraudulent behavior is very important in upholding ethical standards and maintaining public trust in financial markets and financial institutes. Uh, Individuals involved in the operation management or winding up of a company may commit several criminal offenses under company law. Failure to file account or annual returns within the stipulated time frame constitutes a criminal offense. potentially leading to prosecution and fines of up to £5,000 per offence for all directors in defaults. Providing misleading information to auditors is also prohibited. So, with offence of the company facing criminal charges, if found to have furnished false or deceptive information or explanations, or if they fail to provide required information to auditors or accountants or officials, government officials. So, but individuals can defend against such charges by demonstrating that it was not reasonably practicable to provide the requested information or explanations. Phonics companies under, you can see, yeah. As you can see, Section 216 and Section 217 Insolvency Act 1986 are aimed at so-called phonics companies. So phonics within the Insolvency Act 1986 target phonics companies, referring to entities formed after the liquidation of previous company with the similar ownership of management, directors or shadow directors of the defect company with the 12 months preceding liquidations face restrictions for 5 years post liquidation. So requiring court approval to be directors of companies with similar names, contravening these provisions constitutes a criminal offense, punishable by imprisonment and fines. So moreover, directors involved in the management of the new company during the contravention are personally liable for its debts incurred during their tenure. So these measures aim to prevent individuals from exploiting insolvency procedures to evade liabilities and engage in fraudulent, activities. Explains offenses and penalties related to cyber crimes. So, Computer Misuse Act 1998, 1990 is a very, important legislations addressing computer misuse and cybercrime. It criminalizes authorized access to or modification of data stored on computer systems without appropriate consent or permission. So essentially, the CMA or Computer Misuse Act serve as the UK's legal framework or combat hacking and prosecute individuals who exploit computers for malicious purpose. So the act delineates several offenses, including unauthorized access to computer materials, unauthorized access with intent to commit further offenses, and authorized act with intent to impair the operation of computer systems. So these provisions aim to safeguard digital infrastructures and protect against cyber threat by deterring and penalizing malicious activities perpetrated through electronic means. Uh, Fraud Act 2006, we just discussed above, represent a significant shift in the legal landscape concerning criminal fraud. Prior to its enactment, statutory fraud offense were based on deception under the Theft Act 1978. So the Fraud Act replaced these provisions with a broader offense of fraud, which requires dishonesty and intention to make a gain or cause a loss of another party. Act outlines various forms of fraudulent conduct, including making false or misleading representations, failing to disclose information when under a legal duty to do so, and abusing one's position to exploit the financial interests of others. So, by modernizing fraud laws and expanding the scope of punishable conduct, the Fraud Act strengthens legal measures against fraudulent activities and enhance the protection of individuals and businesses from financial harm. Maintaining professional independence. Accountants are obviously, must maintain independence, professional distance from their clients. Maintaining a professional distance from their clients to ensure objectivity and integrity in their works. This, you know, basically entails avoiding conflict of interest and undue influence from external parties that conduct compromise the quality and impartiality of their services. Objectivity is important in accounting practices to foster trust, reliability, and accuracy in financial reporting and decision-making processes. So, accountant must rely on their personal strength of, characteristics. Personal strength of character and professionalism, awareness of legal and professional accountability, and consideration of potential repercussions of their professional reputation to uphold ethical standards and fulfill their duties to client, stakeholders, and the public interests. Maintaining professional independence. Further discussion, it says professional independence of accounting extends to financial interests, which include share equity, securities, and other financial instruments of an entities. So these interests can be direct, meaning they are owned and controlled by individuals or entity, or indirect, where ownership is through an intermediary over which the individuals or entity has no controls. Accountants, not allowed from manipulating or using confidential information for personal financial gain, regardless of whether the financial interest is direct or indirect. Safeguards in place if a significant financial interest is identified, including consulting supervisor or higher authorities and disclosing relevant interest and share trading to corporate governance officials. So these measures help mitigate risks and uphold professional integrity in financial dealing. Uh, Gifts, hospitality, and presents potential threats to the objectivity and confidentiality of accountants, whether offered by colleagues, clients, contractors, or suppliers. So such gestures can compromise professional judgment and integrity. Threats including self-interest and intimidations, necessitating safeguards such as informing senior management or governance bodies, and advising close associates of potential threats and a safeguard. Uh, it's also important to assess the significance of gift or hospitality, ensuring that they do not unduly influence decision making processes or compromise ethical standards in accounting practices or practice. Bribery Act 2010, which addresses bribery, which occurs when a person offers or receive a financial or other advantages in exchange for improperly performing a relevant functions or activity. So this act applies to various scenarios, including contracts, non-monetary gifts, offers of employment, and interaction with foreign public officials. Offenses under the Bribery Act, including bribing another person, being bribed, bribing a foreign public official, and failure by a commercial organization to prevent bribery. By prohibiting bribery and corruption, the Bribery Act reinforces ethical conduct and integrity in professional interactions, ensuring fair and transparent businesses practices. Compliance with anti-bribery law is essential for maintaining the trust and credibility of the accounting profession and safeguarding against financial misconduct and reputational damage. Acting with sufficient expertise, uh, professional competence, and due care are fundamental principle of accountants, requiring them to only undertake work for which they, possess adequate training or experience. It's imperative for accountants to avoid misleading employee about their expertise and seek appropriate expert advice or assistance when necessary. So various threats such as time pressure, insufficient information, or lack of resources can compromise the quality of work and professionalism. Policies of handling client money, which covers funds held by accountants on behalf of clients, require careful handling to maintain ethical standards and prevent conflict of interest. Uh, Basically, accountants should not take custody of client money or assets unless legally permit to do so. For example, HMRC entrusted funds or surplus funds at the end of engagement. Policies for handling client monies aim to ensure accountability, separation from personal or practice funds, and appropriate use for intended purposes. So these guidelines mitigate self-interest threats to professional behavior and objectivity, safeguarding the integrity of accounting practices and maintaining trust with clients. Policies handling care money leads to self-interest threats, professional behavior and objectivity, separation, use, accountability. So it is important to keep client monies separate from personal or practice funds to prevent comingly and potential misuse. Accountant must use client money solely for their intended purpose and be prepared to provide an account of these funds to authorized acquiring at any time. So basically, by following to strict policy guidelines, accountants uphold professional integrity, mitigate risk of self-interest threats, and ensures transparency and accountability in financial transactions. So these policies basically not only protect clients' interest but also uphold the reputation and credibility of the accounting professions or accountants. Policies of handling money. So why not hold client money? So basically, accountants must exercise cautions when handling client monies and refrain from handling them under certain circumstances. These circumstances include situation where the monies belong to investment business clients and the accountant is not regulated, where there is a suspicion that the funds are criminal property, where there is no justification for holding the money, or where are specific conditions on the accountant's license or registrations prohibited the handling of client monies. Uh, Also, yeah, Fraud Act 2006 outlines various offenses related to fraudulent behavior, including fraud by false representations, fraud by failing to disclose your information, and fraud by abuse of position. So, by adhering to these policies and regulations, accountant ensures compliance with legal and ethical standards, thereby safeguarding client interests and maintaining trust in the profession. Confidentiality and disclosure. Fundamental ethical principle. Confidentiality is fundamental ethical principle that applies to information share within the profession, client relationship, and is protected by law such as the Data Protection Act 1998. This act grants individuals the right to know with what information is held about them and requires data controllers to comply with its principles. Notification to Information Commissioner or ICO officer, Information Commissioner of officer office is a statutory requirement, and failure to do so, constitutes a criminal offense. Even after the conclusion of an assignment, confidentiality obligations persist and extend to any staff under an accountant's authority or anyone consulted for advice or assistance. But obviously, there are some circumstances where disclosure of confidential information may be permissible, such as when authorized, when there is a professional or legal duty to disclose, or when disclosure is necessary to fulfill contractual obligations. Uh, Confidentiality, remains paramount even after the completion of an assignment, and applies to all individuals under an accountant's authority or consulted for advice. Uh, However, there are instances where disclosure of confidential information may be warranted. Accountant may disclose confidential information when properly authorized to do so, when there is a professional duty or legal right to disclose, or when there is a legal obligation to do so. So, by exercising discretion and adhering to legal and ethical obligations, accountant ensures the integrity and confidentiality of sensitive information while fulfilling their professional responsibilities. This commitment to confidentiality not only maintain trust with clients, but also upholds the reputation and credibility of the accounting profession as a whole. Yeah, that's it. For further reading, you can visit, Knowledge Bank Kaplan, and also you can get some books or material on your learning management system or Moodle. That's it for today. If there is any further, concern, issue, or question, you can also drop me an email at yasir@ukversity.co.uk. Any questions?
Not at the moment. The only question I have is on slide 18, but I'm not too sure. You can just explain. You did mention a little bit about mortgage fraud. I'm not on the slide 18. That's far back.
Slide 18.
Yeah.
Yeah.
Yeah. So identity theft. So mortgage fraud.
Yeah.
Uh,
An
you know,
example,
yes.
if it's possible.
Yeah, mortgage fraud. Like some people are not allowed to take mortgage based on their income or might be based on their age.
Okay.
Okay, so this is our identity. Might be I can use your detail to get mortgage. You understand? But basically, that mortgage is not, yours. It's mine, and I will pay, or you will pay behalf of me. But they basically this is a fraud. Okay, you understand? Because money going from my account and my everything. So in at some point, if I'm not eligible, I'm not paying or not doing anything, you will be responsible for everything.
Mm.
Okay, so
Okay.
this is a kind of, that basically most of things comes under identity theft.
Yeah.
This is the mean of, so you identity theft you can use for everything: mortgage, credit, card fraud, fake charities, prize, or everything. You know that people use other people details to get mortgage cards or stuff like that. These are basically kind of frauds. Okay.
Okay.
Yeah.
Okay. Thank you. Yeah. See.
Thanks, Martin. Thank you very
Thank
much.
you.
And
Bye.
have a good evening. And I'll see you tomorrow, 2 o'clock, our next lecture, Learning Outcome Force.
Thank
Uh,
you.
okay. Thank you very much.
Yeah,
And
okay.
bye
Goodbye.
for now.
Nice
And
speaking
I'll
to you.
see you tomorrow at 2 o'clock. Thanks. Bye.
Okay. Bye.